Yeah.
What's the deal?
What's going on, y'all?
Yes, welcome back.
Happy Thursday.
Another episode of Earn Your Leisure.
That's a fact.
We got a great topic, very timely topic, talking about crypto. We've talked about crypto, obviously, several different times, but it's always good to just kind of get a refresher as far as where we're at, best practices, what to expect moving forward. So the last one we did was like very like how to get started in crypto. And this will be a little bit more like, advanced conversation of where we're at in crypto, best practices, what to kind of expect, legal legislation, different things of that nature. And we're joined by somebody that's perfect to have the conversation. So inside of EY University, shout out to all our earners, we have different clubs. We have an investment club, and really the foremost authority of crypto inside of the investment club is Austin Haynes. And he's actually somebody that's going to be speaking at InvestFest also. So he pretty much runs the crypto department for EY University as far as, information and having conversations and just updating things in the app and a variety of other things. And been doing that for a while. So
yeah,
perfect in-house.
And one of the most important things about him, and I got to give him credit, a lot of the information that I even look to find in Bitcoin, it comes from him inside the community. He's always adding value. If there's a person that is a living embodiment of do the research and pull up the paperwork, it is this gentleman. I'm talking about extensive research. I'm not even sure where he's getting it from. I got to look at his resume to see actually where he works, because some of the information is so inside of it. I'm like, yo, bro, can we share this? So shout out to him, man. We in for a treat tonight.
For sure. So let's bring him out.
Let's do it. Austin, my guy. What's up, my guy?
Doing well. How you guys doing today?
Good, man. Pleasure. So before we start, how'd you get started in crypto? Like, what's the backstory of how you actually got started in crypto?
So I got started in crypto actually in 2017. I'll never forget it. I was scrolling through social media. I'm in college, and I saw something about Ethereum come across my page, and I was like, "What's Ethereum? What's a blockchain?" I started looking into it, and long story short, me and my friends started getting invested into it. And if anyone remembers, that's the peak of the bull run. And once everything came crashing down, I was super confused about what was going on. Why is crypto crashing like this? If institutions are using it, if everyone in retail loves it. And I quickly found out that most of retail assumptions of crypto were incorrect. And then I started to spend the next 8-9 years, however long it's been now, almost a decade, looking up institutional documentation. And now just in my free time every single day, I've researched. First thing I do when I wake up, research. Last thing I do before I go to sleep is research. And institutions tell us everything. And that's why over the past 3 years, I started to actually screenshot my research. In the last 3 years, I've been able to comprise 12,000 documents, roughly, give or take. So there was a lot of documents I wish I could show the community that came out from 2017 to around 2020. But unfortunately, I didn't screenshot those. So in order to have people truly believe what is going on in the space, I just think that screenshots from the highest level institutions is all that matters.
12,000 documents. I just want to really quickly, because that 2017 was a pivotal moment for myself and for Rashad when we realized what was happening inside the cryptocurrency space. Obviously, everybody knew Bitcoin. Ethereum was kind of on the news, right, a little bit, and then there was this moment of all these altcoins. What was that moment like when you discovered, wait, this is bigger than just Bitcoin? This is an entire space.
It was like a light bulb moment. Because reading the institutional documentation, you quickly realize the plans that they have in store for everything. And they're actively building out an entire ecosystem. And in order to build out an ecosystem, you need a way to pay people. That's stablecoins. You need places to build on top of. That's Ethereum and Solana. You need a way to be able to transfer money and value. That's XRP. And you need digital gold, per se, and that's Bitcoin. And once you go down the rabbit hole, you see their timelines. You see exactly how everything's being laid out. And a lot of people are going to believe that crypto is just coming to the forefront, but they've been actively laying this groundwork for the last 2 decades. Even before crypto came out, they have patents and everything behind the scenes to get this ball rolling.
I like that you use that.
So all right, so let's get into it. So I know you have a presentation, so we're going to just go over the presentation. Then we're also going to just be asking questions and kind of just, you know, keep it free flowing. So yeah, you want to start with I guess your first slide, and then we can just take it from there.
Yeah, let's do it. So this presentation is called Institutional Money in Crypto. For those of you who are watching on YouTube, feel free to screenshot these documents, because if you screenshot any document you find on social media, on any website or anything, you can screenshot it, copy and paste, put it into Google, and the document comes up. So if you're watching on YouTube, you can easily find all the documents that I'm going to share today. Some of the documents that we have are from SWIFT, are from the World Economic Forum, Citibank, State Street, just to name a few. And they cover a plethora of different topics. If you're listening with your headphones or on your way to work, now feel free to go back and rewatch this, because I think that everyone needs to have these documents that we have. As we mentioned earlier, I have roughly 12,000 documents, give or take. And having to concise it down and break it down to 13 documents was very, very difficult. But I think that these 13 documents embody where we are right now in history. So let's get started. This document goes to say that altcoins have largely floundered under a four-factor drag. Token creation exploded from roughly 12,000 tokens in 2017 to 1 million in 2021, and now almost 40 million today. With liquidity comparable to past cycles, capital is stretched razor thin. This creates an environment where capital rotation occurs at a breakneck pace, spawning a penny stock boom that undermines long-term investor engagement and sustainable wealth creation. So what does this mean? And back in 2017 and even 2021, you were able to throw money at any random token and potentially make life-changing wealth. And that, if that's any of you guys today, congratulations, I'm proud of you. But the environment we're now entering, there's too many tokens to make all boats rise. And the way that institutions work, because as we know this week, as of recording, is crypto week, and I'm fully expecting the legislation to get passed, and we'll talk about that shortly. But with institutions coming to the space, institutions don't adopt stuff for fun. They adopt things because it's more efficient, it's faster, and it's cheaper. So they're only going to put capital into the tokens that they believe will increase in wealth. And then it comes down to a point, how do we know what tokens to invest in, like institutions? How do we know what allocations institutions are putting into the crypto space? Well, they actively tell us, and they actively document it.
Real quick. So for the person that's just listening, the average listener, they hear tokens, there's the word coins. Just quickly, just give them the difference between coins and tokens.
So essentially, the easiest way to break it down is that it's the same thing. Imagine XRP or Bitcoin. Imagine that just being the same thing as the Apple stock, except now we can build on top of those platforms and create an entire ecosystem. And then how each ecosystem works is, I don't think we can even imagine it. The way I like to compare it to is when the internet first came out, or when the iPhone first came out. We have our use cases that we think are going to be used, but institutions actively document how the use cases they can't even imagine. And it's going to be a frivolous thing for years to come.
So pretty much what you're saying is that, okay, invest in the coins that institutions are investing in, and if institutions are not investing in it, stay clear of it.
Exactly. I think the safest bet, as we know, is Bitcoin. Mr. Granddaddy of them all. It encompasses roughly around 60% of the total market cap from crypto. But it goes deeper than Bitcoin, because businesses have different pain points, and businesses have different use cases. Same with governments. And the world will never agree on one blockchain. We can't even agree on peace. So how could we ever agree on one single blockchain to use? And that's where it becomes difficult. If there's 40 million tokens in the crypto ecosystem and more today, that document came out December of last year, I'm pretty sure. If there's more today than 40 million, how do we know what to invest in? So I personally focus on institutional documentation, because if an institution with over $1 billion in assets under management is investing in something and believes in it, and like I have you guys say with Mike Novogratz, if a billionaire actively comes on and says that some institutions are investing in Solana, we have to believe them.
Which institution should we be paying attention to in terms of who's investing into the space?
All of them. But the way that I like to break it down is I focus a lot of my research on the Bank of International Settlements. For those of you guys who don't know who that is, that's the Bank of Central Banks. I focus my research on the Federal Reserve, the U.S. government. SWIFT essentially handles messaging and transactions for 11,000 banks globally. Now, the World Bank, the IMF, the European Central Bank. Because if you look and you do some research, you can easily see what institutions and what governments move the most amount of capital. And that's the United States, and that's Europe. So then we can narrow it down to the institutions that are located within the United States and Europe. And then breaking it down that way, you'll find documents from State Street. You'll find documents from BlackRock. You'll find documents from Vanguard, and plethora going down the list.
Gotcha.
So this particular document right here is from EY and Coinbase. So before I talk about their survey surveyed 352 institutional investors. And why did I focus on this survey? Because this goes deeper than just finding a document. It goes deeper than just finding a survey. Who did they actually interview and who actually answered these questions? Every single person that answered this survey has over 1 billion in assets under management, and they only surveyed decision makers, COOs, CEOs, and heads of departments. This ranged from people who work in family offices, asset managers, hedge funds, private banks, and VCs. And they go on to tell us that 73% of surveyed investors hold cryptocurrencies beyond Bitcoin and Ethereum, but most only hold one to two others, XRP and Solana. And they go on to tell us what percent of institutions hold each token down the list. 97% of institutions hold Bitcoin. 86% of institutions that were surveyed hold Ethereum. 73% of people surveyed only hold Bitcoin or Ethereum. 34% hold XRP and 30% hold Solana. And as you can see, there are some others, so feel free to screenshot this. This is a good guide. Another way I like to guide on how I make my investments on not only this, but also what ETF filings are out, what tokens are being filed for ETFs. Because once the ETF comes out, it's already too late. But if we know which applications are out and the processes that go behind it, it makes our life 10 times easier, and we can be invested like an institutional investor. Because for those of you guys who are in Earn Your Leisure and who have watched the crypto class I teach, I preach all the time, we have to follow smart money, not dumb money. And they actively call us in these documents dumb money. But just because that they call us something doesn't mean we actually have to be that. Doesn't mean we actually have to think like that or invest like that. We can invest just like them because they document everything that they do.
So from that standpoint, Bitcoin, obviously the first choice, Ethereum, is XRP, then Solana, or Solana and XRP?
I think it's a give or take just because of use cases. They do two completely different things. The best way that I like to differentiate between the two is XRP mainly handles settlement. It's the settlement vehicle for traditional finance to traditional finance. So it's just a way to send money faster between banks. Me personally, I've gone back and I've watched all the Market Mondays episodes, all the Earn Your Leisure episodes. And Rashad, you spoke about it a plethora of times on the true value and use case of XRP, and you hit it right on the head. But Solana is basically like a decentralized app store that retail can build on top of. And Ethereum is essentially an institutional app store they can build on top of. The apps and the layer twos that will be built on top of these platforms, I think that the use cases are unknown and unforeseen, and that the whole game is going to change in the next 20 years. But if we know that institutions and retails are going to be building on platforms like Solana, platforms like Ethereum, and the institutions will be sending money back and forth on top of XRP, I think it's a no-brainer investment use case.
The use cases for XRP, Solana, Ethereum, obviously Bitcoin. Another one of those coin words that people hear in the space is stablecoin. Talk about that a little bit and the use cases for that.
So I have a couple slides talking about stablecoins later, but just to get into it right now for a basic definition, if we were to build out any digital economy right now at scale, the very first thing we need to do is decide how we pay and how we get paid. If we don't have those two things figured out, we can't build out a whole economy. And a word that comes up a lot in documents from the Bank of International Settlements to the UK government is this term singleness. $1 has to equal $1, whether it's on the blockchain space, whether it's a cash deposit, whether it's physical cash. We have to be able to trust that our dollar is a dollar no matter where it's at. And we need regulations behind it. And that's what the Genius Act does. The Genius Act regulates stablecoins. And what people don't realize a lot about stablecoins is that they're backed by 1-to-1 to the dollar once the Genius Act passes, because it's a national security risk as well to not have stablecoin legislation, because over 90% of stablecoins are denominated in US dollars. They're not only backed 1-to-1 by a dollar, but they're also backed by short-term treasury bills. And something that I found interesting was a document that I read, let's say 3-4 months ago. it spoke about how stablecoins can help with the national debt. Because if overnight we're creating trillions of dollars going in to the U.S. short-term treasury bills and creating the buy of our debt overnight. Citibank actually documented that by 2030, they're predicting that stablecoins will be the largest holder of U.S. national debt. That's very, very telling. And it's going to create a world where governments and banks and institutions aren't the only ones holding our debt. Because if someone on here watching is from Argentina or from somewhere where they have high inflation, you would rather save in dollars. You would rather not save in your currency because you can wake up one morning and your dollar be worthless. But if you can just download a smartphone app and transfer your money into stable coins, now you're holding your value of your dollar over the long period of time. And not to mention, if we pass this stablecoin legislation, which I truly believe it will put a downward pressure on yields, allowing the U.S. to borrow at cheaper rates. Stablecoins have a plethora of different use cases. I have a slide on here to talk about how stablecoins can help with businesses and how it can bring increased market cap of companies. It has a tremendous amount of use cases, and people are only focusing on one or two. But as I always say, follow institutional documentation because they actively tell us the real use cases regarding stablecoins.
All right, let's keep going.
So something that I was looking for a while is what percentage are institutions actually putting into stablecoins? Because we know that the bond market is essentially dead. You guys talk about the market monies all the time. The bond market is becoming almost uninvestable at this point. And what's going to replace it? Well, institutions actually tell us the allocations that they're putting into crypto. This document goes on to say in 2025, 59% of respondents plan to allocate over 5% of the assets under management to cryptocurrencies. This is from the same survey from previous that interviewed 352 institutional investors, which every single one manages over $1 billion. So you can do the math yourself on how much money each one will be allocating. This blue box on the right side of the screen, that's the 59% of people who are allocating over 5%, but the lowest end is 5%. Some institutions are actually allocating over 30% to cryptocurrencies. Now, I'm not telling you guys to allocate 30% or 20% or even 5%, but if institutions are actively documenting that they are allocating over 5% to crypto, I think it deserves a place in our portfolio. Now, BlackRock came out with a document sometime at the beginning of this year, and they stated that they actually recommend that people invest 1% to 3% in crypto.
That was our number. That's interesting. That was our number as well.
Mm-hmm. So, whether you have 30% in there or 1% in there, I think some allocation to crypto would be intelligent. And then that goes to the point again where there's 40 million tokens, and what tokens do you actually invest into? The safest one is Bitcoin. People that are close to me know that I recommend Bitcoin as a 401k. Every single time you get paid, put the same amount you put into your 401k right into Bitcoin if you don't want to put any more than that. And then do that on a nonstop automatic payment. It's going to outperform your 401k over the course of history. Bitcoin is one of the top performing assets of all time. So to be able to have an allocation to that, some of the other important altcoins, I think is very, very important.
So if we look at the top 10, right, if we go to Coin Market Cap and we look at the top 10, there's some, obviously, I mean, billion-dollar crypto companies, right? Are we investing anything outside of the top 5, even if there's institutional investing that we see in the top 10, or are we sticking to Bitcoin? Like, what's the suggestion there?
My suggestion there, and we'll get more into the weeds of what this is later, but there's actually a business standard called ISO 20022 that everything we deal with in life, our standards are regulated, and it goes over most people's heads. Like, the standards are the reason why that I can have a Gmail account and you can have a Hotmail account, and our emails can go through to each other. Standards are the reason why that my Verizon phone carrier can communicate with your AT&T phone carrier. Standards are the reason why you can take money out from an ATM and not be at the physical bank location. There's actually business standards. There's tokens that are ISO 20022 compliant that I would suggest after the top 4. Like, gotcha. Get your top 4 in. And I follow what you guys say a lot. And I think it's very, very intelligent to have 4 to 8 top picks. I think once you get past 8, you're kind of stretching a little bit and not being hyper-focused and not getting the true amount of gains that you deserve as an investor. But I think the safest picks, Bitcoin, Solana, Ethereum, XRP, After that, some of the ISO 20 or 22 compliant tokens, such as XLM, HBAR, XEC, Algo, Quant, IOTA, and Cardano, as well as Chainlink. I've seen Chainlink a lot in documentation from Swift. Chainlink, I like to say it like this, is essentially married with Swift. The one-on-one, they go hand in hand. And Chainlink, what Chainlink specifically does, because blockchains aren't inherently interoperable. The problem with our financial system today is that our financial institutions don't communicate to each other. My TD Bank can't communicate to your Citibank account and can't communicate to your Chase Bank account. And that's a problem. That causes us to have no-show and vote-show accounts, causes us to have money that's sitting dormant. And a lot of capital is going to be released into the world. And what is a no-show account? What is a vote-show account? It's essentially me parking money at another bank and saying, okay, when I pay you, I know it's going to take 5 to 7 days. I know there's going to be high fees, and the payment may or may not get there. So here's the money in advance. And once the transaction goes through, just put it back into account in simple terms. But roughly there's $21 trillion locked up in capital like that. And Chainlink specifically handles the interoperability from blockchain to blockchain, because the Bitcoin blockchain doesn't talk to the Ethereum blockchain. But we also need interoperability between traditional financial institutions. And that's what ISO 20 or 22 does. And it's just business standards that institutions have to follow.
Gotcha.
So when people ask me why crypto, why blockchain, why do I need to be an investor right now? This is a document from Citibank. They go on to say 2025 has the potential to be blockchain's ChatGPT moment for adoption in the financial and public sector, driven by regulatory change. And there's a couple key words in this that I don't want to overlook whatsoever. Citibank quite literally said 2025 has the potential to be blockchain's ChatGPT moment. We all know what ChatGPT did once it hit the world. And for them to compare blockchain to that kind of took me off guard, even after all the documentation that I've read. But that's not the most important thing to me. The most important thing was driven by regulatory change. They're basically telling us the one thing that's stopping blockchain from having a ChatGPT moment is regulations. As we know, regulations are on their way. In crypto, a lot of people get stuck in this bubble and think that crypto is just the United States. Crypto is global. There's already regulations in the European Union, Japan, Hong Kong, Russia is on the way, Canada, you name it. If you go down every single country in the world, they're regulating stablecoins. They're regulating digital assets. But the largest mover for the entire world economy is the United States. And once the United States allows the Genius Act, the stablecoin bill to be passed, that's unlocking trillions of dollars into our economy. Because remember what I said earlier, the first thing of what we need when you build out any digital economy, you have to figure out how to pay and how to get paid. And then it's off to the races after that. But to speak more about stablecoins, this document is from the Bretton Woods Committee in February 2025. They go on to say unlocking stablecoins, exploring opportunities and also risks. The global dialogue around tokenization, the process of representing traditional financial assets on blockchains, is rapidly advancing due to the potential to reduce costs, speed settlement, enhance transparency, and increase efficiency through automation and programmability. They go on to say these potential benefits and why many, including the World Economic Forum, Citigroup, Boston Consulting Group, and others, estimate that trillions of dollars of financial transactions could be tokenized in the next decade. Larry Fink wasn't the only one to tell us that tokenization, everything will be tokenized. Every single bank, government institution around the world is saying the same exact thing. They go on to say, stablecoins are a tokenized form of currency that aims to perform the functions of traditional fiat currency on the blockchain. Like I told you guys earlier, $1 has to represent $1, whether it's a cash deposit, cash, or stablecoin. And that's what this Genius Act does for us. Stablecoins are
you deep in the weeds here, man. Tell us who Bretton Woods org is. Like, for people who've never heard of it, I've seen you do this in the presentation before, so I know the reference that you're using here. Tell exactly what BrettonWoods.org is.
So essentially, the reason why the United States dollar is the world reserve currency was a conference back in the day called the Bretton Woods Conference. They got together, they decided that they wanted the United States to be the world reserve currency. From that conference, organizations globally got created. The IMF, the World Bank, and the Bretton Woods Committee basically helps the IMF and World Bank ensure that the United States dollar succeeds over the long term. And those are two very, very high-level organizations, the IMF and World Bank. And for the Bretton Woods Committee to be helping them out to pursue the United States' best interests is very, very apparent, very real. So on the bottom left, I'm halfway through that paragraph, they go on to say stablecoins are used as on and off ramps to enable the transaction from traditional fiat applications to those that take place on the blockchain. So stablecoins, all they do is allow us to transact onto the blockchain from the TradFi world to the DeFi world. They go on to say that there's rapid growth in the essential role stablecoins play in facilitating the tokenization of traditional assets, make it critical to understand their benefits and risk. So without stablecoins, we can't tokenize assets at scale. We need a way to pay and a way to get paid. In order to do that, and in order to tokenize every asset, like Larry Fink said, this is the very first step. And I actually had the privilege to meet with a representative from the SEC, and just I told them that I would keep the name confidential. But they told me that stablecoins was low-hanging fruit, that stablecoins was the easiest legislation and the first necessary step to moving on throughout future legislation and getting this ball rolling in this digital process. And for them to tell me that, kind of took me back once again and made me realize that this stablecoins aren't the final step. This is just the first step.
Which makes kind of sense why we're talking about the Genius Act, right? When you hear that, it makes sense why that would be the first one. I know the Clarity Act is something that they're trying to follow up right after. But if one gets passed, the likelihood of the next one probably will get passed as well.
Yep, very, very likely. Right now, it's crypto week, and for the House and the government to declare an entire week crypto week is very important. I'm very hopeful that the Genius Act can get passed. I'm very hopeful that Genius Act can get passed, and I'm very hopeful that the Clarity Act can get passed. But realistically, all we need for institutions to fully enter this space at scale is a Genius Act first. No matter how much longer that the Clarity Act takes to get passed, who knows? Congress moves slow sometimes. But regardless, this is a very, very important step. And I feel as though that people overlook where we are in this space and where we are in this ecosystem. Because if we were to be on here talking about crypto, we wouldn't have thought that the government would name a week crypto week 5-6 years ago. We wouldn't have thought that we would have regulations or even be talking about BlackRock entering space. We wouldn't have thought that JP Morgan would be issuing a stable coin, which they've been in the space for a long, long time, but that's another topic. And these other banks and institutions, tailwinds are turning to headwinds, and the space is picking up very, very fast. A good analogy that I like to use personally is that sometimes weeks happen in decades and sometimes decades happen in weeks. And right now we're in that space where decades will be happening in a matter of weeks regarding the crypto space. Because once we get regulations, that's when we see that these NDAs be released from companies that are partnered with these crypto companies, or from banks that are partnered with these crypto companies. And we start to see what has actually been going on behind the scenes. Because something that I can tell you guys is that all these posts that you may be seeing on social media saying that Citigroup is now entering the crypto space, or Walmart is looking into, and we'll be talking about Walmart shortly as well, is looking into stable coins. They've been actively testing this for the last 3-4 years. So when I see it, I'm like, oh, wow, now they're allowed to talk about it. Now that we're getting close to the regulations, they're ready and getting ready to flip the switch. And retail thinks that flip the switch is a made up term. It's real. Like that flip the switch term is real, but it's not a singular moment. It's a culmination of a bunch of things happening at one time.
That's a lot. I always give you credit on Market Mondays when I'm saying I talk about the dates that are important in crypto, because I've watched some of the documentation as we got closer to the end of July here. This moment, Bitcoin has been on the run up. If these acts get passed, which I mean, in all likelihood they look like they will, where do you think we're headed with Bitcoin for the end of this year?
End of this year, institutions have actively documented that will be somewhere between 150 to 200, and most are saying between 150 and 180. But I wouldn't put it past, because I've seen it documented a few times, is that we're in the realm of a super cycle. If we get an influx of institutional adoption entering the space and the government creating a Bitcoin reserve, it's game on. Like, I can't even imagine the prices that we're going to see. And I think that people are overlooking one specific point in general, is that once the Clarity Act gets passed, which is the complete market structure bill for crypto, these funds, these ETFs, can potentially be allowed in pension funds, 401k plans, retirement accounts. And those people aren't selling. It's reducing supply and increasing demand. And we already know that Bitcoin has 21 million tokens that will ever be created. Like, a lot of tokens will be held forever, and the price is only going to continue to go up.
Whew. Well, let's keep cooking.
So moving forward, I wanted to let people know, out of all the documents I had, I thought this one was very, very important. Just because I want people to realize that stablecoins not only help the digital asset ecosystem and not only makes payments and cross-border payments, et cetera, cheaper for these institutions, because realistically, companies are going to end up adopting their own stablecoin. Walmart being one of them, Chipotle and Kroger being one of them as well. But for this conversation, we're going to reference and only talk about Walmart. This document goes on to say at the top, cheaper payments improve profitability. In fiscal year 2023, Walmart's revenue was $648 billion, and the net income was $15.6 billion. They have a projected scenario analysis where if Walmart has widespread stablecoin adoption, and that just means that they settle their transactions behind the scenes with stablecoins, because we can pay and swipe with our Visa and MasterCard, and behind the scenes, those transactions are settled using stablecoins, and we'll never even know it. Visa's in the space. I have documents to prove that. MasterCard's in the space. I have documents to prove that. American Express, you name it. So to get widespread stablecoin adoption next 5 to 10 years, I think it's very, very much closer than people think. But the projections that they have, they said with stablecoins for Walmart specifically, the improvement to cost of transactions increases $9 billion. The new net income from $15 billion before stablecoins and after stablecoins becomes $25.3 billion, a $10 billion increase. The current market cap is $759 billion as of December of 2024. The new market cap will become $1,234 billion, a 62% increase. So stablecoins not only help the everyday person save money, not only help the everyday person potentially hold their value in the dollar if they use a different currency, live in another country, but they also help these companies on the stock market increase their market cap. I think that's personally a no-brainer for some companies to adopt it. And if there's any companies watching this now, like, feel free to look into the stablecoin space, because you can add a few $100 billion to your market cap overnight.
Yeah, well, that's a game changer, especially for fintech companies, right? When you're talking about those transactions, because if this could change market caps, you're talking about companies. We're going to see a lot more $1 trillion companies than we see now.
Exactly. And if people really look at their budget and where most of the money comes from, our payment system is outdated. Like, I spoke to my mechanic actually a few months ago because I was interested. I said, how much do you pay in transaction fees? And he told me $2,000 every single month. So with stablecoins, those fees come down to almost zero. He can charge the same price and increase his margin by $2,000. I think stablecoins have a very overarching thing that most people are overlooking.
So talk about the cycles of crypto too, because I know you talked about before you were at university where it's like, 4-year cycles.
Mm-hmm. So now the 4-year cycle in crypto, and I think it's very, very important that everyone know exactly what that is. So the first year, crypto normally moves in 4-year cycles. The first year being the bear cycle, the bear year. The next 2 years being consolidation years, and then the final year being the final year, the bull run. Final year of the cycle being the bull run. Right now, 2025, we are in the bull run, and it's ironic that we are in the bull run right before markets or prices will increase. At the same time, we're getting legislation around the world. At the same time, ISO 20022 got adopted by the Federal Reserve on July 14th. It's ironic that all these events are happening at one time. But with that being said, it's actually documented that the 4-year cycle is going to change. How it's going to look, I can't tell you. No one has a crystal ball into the future. I can just tell you what these institutions actively speak about. And the reason why they believe it's going to change is because, like I mentioned earlier, with these ETFs being put into pension funds and 401k plans, like, those investors aren't selling. That allows us to be able to hold certain levels that we weren't able to hold before. And that with these institutions entering the space as well, I don't think that they want to see an 80% drawdown on capital.
That would be like that 2026 traditionally would be the year that there'll be a nice pullback and 2 years, and then we run into another 4 years. So that could all be changed in a matter of months.
That could all be changed. So I'm interested on what is actually going to look like. Will the 4-year cycle hold true? Like, maybe. Will the 4-year cycle not hold true and we have a small pullback? Maybe. Or do we just gradually go up over time? I didn't include the document in here because I only want to include one from State Street instead of the one about the reference. But State Street actually documented that Bitcoin is less volatile than some of the Magnificent Seven stocks, Tesla in particular. So for State Street to actively come out and say that Bitcoin is less volatile, I think that's very telling.
Indeed, indeed.
So I know that Larry Fink said, for those of you guys who don't know who Larry Fink is, he's the CEO of BlackRock. He's a very, very important figure in the whole entire world. But he stated that tokenization is happening, that all assets will be tokenized. But he's not the only one to think that. Who else thinks that? This document goes on to say, we believe there are decades of growth ahead for tokenized assets, and so do market analysts. The future predictions, Standard Chartered believes that by 2034, there will be $30 trillion of tokenized assets. Boston Consulting Group believes that by 2030, there will be $16 trillion of tokenized illiquid assets. Citi believes that by 2030, there will be $5 trillion of tokenized digital securities. Now, that's a lot of trillions when we really break it down, and that's only three organizations. So what is the entire tokenization market cap look like? Like, how much value do we have? If you look at the right side of this screenshot, it says expansible addressable markets. So the total value for all these markets, I won't go down and read each one individually, is $410 trillion. But then the question becomes, like, what's the actual time frame for us to tokenize these assets? Well, that's documented as well. State Street actually gave us the time frame to mass adoption for tokenization. At the bottom of the screen on the graph for those watching, it says time to mass adoption and transformative impact on the market. So this document came out in 2024. I think in August or November of last year, somewhere around that time frame. Now I'm going to say 1 year from last year, the bond market will be tokenized. 2 years from last year, commodities will be tokenized. 3 years, private equity funds. 4 years, real estate funds. 5 years, equities. And then 10 years down the road is real estate. But that doesn't mean that that's when they will start tokenizing those assets, because these assets are actively being tokenized now. It's just time frame to mass adoption. So if we can realistically look and say 10, 15 years, according to State Street, that we'll have mass adoption for tokenization, and know that this previous document tells us that there's $410 trillion to be tokenized, that's a lot of trillions. We're sitting at a $3 trillion market cap, and I truly believe that the floodgates will open once we have regulatory clarity. Because institutions just need regulatory clarity. They have to know that when they adopt something, when they build something, that they won't be sued for doing so.
So that gives us to 2030. If I did the math right, by 2030, which is another one of those circling your calendar dates. Interestingly enough, when there was a report about the market cap companies over the next 5 years, and Bitcoin was the number 5 market cap company, surpassing Apple, surpassing Google, and this kind of aligns with that, no?
Aligns perfectly. And that's one of those confluences that I look for. Because me personally, I don't believe in coincidences. I don't read one document and think that's the end all be all. I need to read 3, 4, or 5 documents that are all saying the same exact thing for me to actually believe and actually be able to speak on it. And they're all saying the same thing. Now, the World Economic Forum actually has a vision 2025 where we start this adoption. And I've seen a lot in documentations that they want CBDCs, stablecoins, all to be regulated so that they can start building this infrastructure fully out by 2030. And ironically, that aligns with the next bull run. If the 4-year cycle holds true, 2029 would be the next bull run year. So will the 4-year cycle hold true? Who knows? I've seen it documented both ways. But if it does hold true, that still aligns perfectly with these institutional targets for 2029 and 2030.
Mm-hmm.
So this is something that, to me, I think is very, very important because, like I spoke about before, there's actual business standards that have to be addressed. And if I were to tell you guys that these specific organizations that I'm about to read off all sit on a committee and all make decisions together, on what the financial standards will be, people would say it's a no-brainer. But people hear ISO 2022 and don't realize who actually sits on the committee. So let's read it off. The DTCC, for those of you guys who don't know who the DTCC, they are the post trade and settlement giant in the United States. They process over $2 quadrillion every single year. The CFTC, located in the United States, Visa, MasterCard, SWIFT, who processes around $5 trillion every single year. Then you have the Bank of International Settlements, who is the central bank of central banks. You have the Bank of England. You have the European Central Bank. You have ISDA, which is the International Swaps and Derivatives Association. You have JP Morgan. And ironically enough, they actually admitted a blockchain company to this organization, and they admitted Ripple to this organization. And that's a testament to the XRP ledger's compatibility with institutions. Because if you remember what I said earlier, XRP is specifically meant for institutions. It's specifically meant for TradFi to TradFi payments, to be able to settle and move money faster than what they can do today. Because you can settle with stable coins, you can settle something instantaneously. So now I know people are probably looking and thinking, how does ISO compare to blockchains and XRP and Bitcoin and so on and so forth? The way that I like to describe it is, Caleb Silver actually mentioned this on you guys' last how-to, briefly. But the physical blockchain is the road or the train tracks. Then you have stable coins. The stable coins are the car or the train. The tokens are the gas fees themselves. And ISO 2022 is just a roadmap for financial institutions on where to send payments and what specific industry they're sending payments to. And then we can go deeper and we can make many, many different analogies. But for all you guys to come together and realize why all these different things are important and why it won't just be one token and why it just won't be one thing that propels the digital financial revolution, I think that's important because everyone wants to zoom out on the stock chart. Everyone says, look at the 5-year on the stock chart, look at the max on the stock chart when you're making analysis, but no one zooms out on the digital revolution that we're all living through. Like over the last 40 years, we've digitized our entire lives. Value is just up next. We had Web 1, Web 2, and now we're in Web 3. And it can be up for debate what Web 1, Web 2, and what Web 3 all are. But I don't think it's up for the debate that our lives are just becoming more digitized year over year over year. And why can't we send money as fast as the email? Doesn't make any sense. Like the Fed now, the Federal Reserve actually came out with a platform called FedNow. That's the standard that they switched to on July 14th. On July 14th, the entire Federal Reserve switched to that standard. And that's a global standard. ISO 2022 is a global standard around the world. And SWIFT mandated that by November, the entire world has to switch to this standard for business messaging. But with that being said, FedNow specifically, for instance, allows us to have the potential to get paid every single day upon clocking out. The reason why we can't get paid every day is because our system is too congested. It can't handle all those transactions at once. It wasn't built for that. Now they build out a platform and a digital system that we can actually scale and build on top of. And the switch only happens once. This change only happens once. And I think it's very, very important for people to be knowledgeable in the space and to be understanding of where we are headed. Because it's not just Bitcoin or Solana or XRP or Ethereum or Chainlink or your favorite token, whatever it may be. It's a compilation of them all and what are institutions actually invested into. Because our whole goal is to make money. So let's follow exactly where institutions are putting their money. Let's follow exactly where they're partnering with.
So, okay. Okay. Any more on the slides?
Yeah, I have 2 or 3 more. So just so you guys get more of an understanding of what ISO really is, this document is from the World Economic Forum. It says messaging standards. Messaging standards that are compatible with ISO 2022 will be important for integration with existing payment systems for CBDCs and stablecoins. That's letting you know, like my analogy before with the train tracks and the train being the stablecoins and ISO 2022 being a roadmap, is they need ISO 2022 for complete standards for TradFi payments. That's all it does. And then Chainlink handles the blockchain interoperability. But moving forward, just so I can stress the importance on how important standards and business standards really are, this document is from SWIFT. SWIFT goes on to say, it is apparent that business standards will be key to the success of DLTs. It is also necessary to gain clarity and consensus about the meeting of shared data in the multi-party business environment, whatever the technology used. Existing standards, principally ISO 20022, will have an important role to play, both as sources of industry definitions and enablers of interoperability between DLTs and existing automation technology, including financial messaging. They're telling you straight up that ISO 20022 has an important role to play for business standards, for CBDCs, for stablecoins, for whatever it may be, for payments for TradFi institutions. And for those of you who don't believe that crypto is embedded directly in ISO 20022, this is a document from Swift. Swift handles over $2 quadrillion every single year. They don't care about my opinion on whether I think crypto is involved or not, but they actively tell us it is. And then the last, this is the second to last slide I have. But this document goes on to say, and I know it may be small on the top left, so I apologize. But to find this document, and I think it's a very important document for people to read, they also surveyed 200 institutional investors in the United States, whether it's large financial institutions or regional community banks. They go on to say that most banks have projects in flight to modernize the payment platforms. While ISO 20022 is the priority, they plan to launch other programs in the near term. That's very, very important. So what programs are they launching? This document goes on to say that bank priorities in the payment space in next year, and if you look from the second to the right, it says digital assets. 69% expect to make digital assets their priority within the next year. 19% are making the priority in the next 6 months, and 1% are making the priority now. So it's not one token versus the other. But this right here embodies the entire reason why I believe that right now is the greatest time to be an investor in the crypto space, before regulations, before these institutions actually enter the space and unlock the floodgates. It's because we're living through the great wealth transfer. This document is actually from Galaxy. And those of you who don't know Galaxy, it's Mike Novogratz's company. So once again, if a billionaire tells you something, you have to listen. And his company believes that we are living through the great wealth transfer. So what's the great wealth transfer? Millennials, baby boomers are set to pass down $84.4 trillion to millennials by 2045. It's a lot of trillions. So not all that money will be going to assets or digital assets. Some of it will be going to pay for whatever. But all that money is going to a generation that's not only more favorable of this digital assets, to also more favorable of investing. So this is not something that's only going to help the crypto ecosystem. It's going to help the stock market in whole. $84 trillion getting passed down to investors to be able to invest only helps our case throughout 2045.
And so the ISO 2022, because you see that on like YouTube comments, like they spam that all over. Mm-hmm. So that's something that is interesting that you kind of broke that down. So if a coin is not complying with that you shouldn't invest in that coin?
No, because ISO 20022 specifically handles TradFi payments. The blockchain ecosystem is too big to be able to invest into it. And that's why platforms and institutions are building on Ethereum and Solana. They're using Chainlink. They're building on Avalanche or Polygon, and to name just a few. But in order for us to have business standards and standards for payments, because we have to know and we have to be able to trust that we're both receiving the same information if we're going to pay each other trillions of dollars or billions or millions, whatever it may be, from financial institution to financial institution. And that's all ISO 20022 handles. And the reason why I love ISO as much as I do, and I speak on a lot, the EYO community knows this as well, is because it's not going to be a overnight flip of a switch where the ISO tokens go to the moon. As we saw, the Federal Reserve just adopted on July 14th. But it's just going to be consistent, sustained inflows of trillions of dollars moving over these tokens. And I think it goes to the use case of Ripple and XRP as well, because we know the institution's top 4 picks are Bitcoin, Ethereum, XRP, Solana. And Ripple actively sits on the board of ISO. And for those of you guys who don't understand the difference between Ripple and the difference between XRP, XRP is independent of Ripple. But Ripple is just a company behind everything they're building with XRP. Ripple did not create XRP. They were gifted XRP. So XRP can last without Ripple, but Ripple cannot last without XRP.
Interesting. Gifted. How did that happen? How did this transaction happen?
Honestly, I'm not completely sure. That's above my pay grade, and I stay out of grown folk.
Let's protect this all. You brought up altcoin that was hugely popular over the past couple of years, Polygon. Haven't heard much about it over the past 12 months for sure. I knew, it was one of those situations where you could actually loan some of your crypto. Where is Polygon at today? What's up with it? How come it's died down in terms of hype around it?
I think it just died down from the retail standpoint. And I'm happy you brought up the hype aspect because I want to touch on that too. But institutions still document Polygon. They're still building on top of it. Will it be one of the top 10 or top 15 tokens? Probably not, because there's a lot of other winners who are ahead of it, like the Bitcoin, Ethereum, Solana, XRP, XLM, HBAR, Link, Avalanche, you name it. But institutions actively document about it. And who am I to tell an institution that they're wrong? But regarding the hype standpoint, I think it's interesting how retail sentiment changes so fast. Because if you guys remember right now, back in December, everyone was going crazy around crypto. But currently right now, we're almost at the same prices we were at in December, if not higher for majority of the tokens that I named today. And there's no retail sentiment. I was actually reading a document a couple of days ago, and I shared it in the EYLU community. It went on to say that institutions are all in, but retail is nowhere to be found. And I thought those were very, very important words.
So what about, like, especially for Bitcoin? At first, it was supposed to be used as like a currency, right? Cryptocurrency, but more and more it's a store of value. People don't want to, spend Bitcoin to buy something because they think that it's going to go up in value, or it's just, it still fluctuates. It's not as volatile as it once was, but it's still very volatile compared to like a regular currency. So is the word currency, does that need to just be taken out of the equation at this point?
I'm so happy you said that, because I personally hate the term cryptocurrency. Now, people hear currency and believe that it's something to pay somebody with. If I know that it's projected by institutions that in the next decade or so, Bitcoin will hit $1 million. I know people online are saying that it's going to hit $1 million tomorrow. That's not happening. No, but over the next decade, 2 decades, especially as you guys saw that was documented with the Great Wealth Transfer, it's going to hit a very, very high number. And why would you want to use that as a means of payment? And it's actually documented by institutions that Bitcoin failed as a payment mechanism, but it did not fail as a store of value. It actually overly exceeded what the expectations were. And for it to be a store of value that's now, what, 5th market cap in the world, 6th market cap in the world, like how can you argue its staying power?
Yeah. In terms of market cap, when we look at it from equity standpoint, companies like Coin and companies like MicroStrategy and even Bitcoin ETFs, but all this information, where do you think that's headed? Not that we have to invest in them, but it would seem that those would highly benefit from all this legislation.
Mm-hmm. That's what I believe as well. But something that I'm weary of, because if you go back and you look at these crypto companies that have been around for the last 1 to 2 bull cycles, their prices fluctuated with the bull cycle. So I'm very wary of being a long-term investor in some of these companies until it's proven that the 4-year cycle is broken. Because I would rather invest into a top company like Microsoft, NVIDIA, Visa, S&P 500, rather than invest in a company that fluctuates every single 4 years based off of crypto hype.
Yeah, that one of the things that was brought up when I think a few weeks ago when Visa took a hit was its involvement in stable coins, and how if the stablecoin adoption happens, what it'll happen to their revenue when companies like Circle IPO in that space. What's your thoughts around that? Do they play a role, or do they get lost in this?
They play a very, very important role. And personally, it's been one of my main buys over the last 1.5 to 2 years. As I've realized the more of a role they play in the stablecoin environment. Because if you just think about it logically, to get the whole world to switch off of a Visa card and buy some random card where you can pay with stablecoins is too much of an infrastructure switch. So Visa and MasterCard are actively adopting stablecoins for the back-end infrastructure. And then another reason why some tokens and why some assets won't be able to compete with Visa and MasterCard, and that's why stablecoins can, is because you have to have a high transactions per second. And that's what Visa and MasterCard had. And most tokens can't perform that. Most companies can't hit 1,500 transactions per second, but Visa and MasterCard can. So it makes complete sense for these stablecoin companies, which they are, to partner with the Visa and the MasterCards behind the scene to allow them to be able to use their infrastructure.
Yeah, and the trust.
The trust is important, because if you don't have trust, you don't have anything.
What about XRP? What's your outlook as far as like price points for that?
Price points for XRP, I think $5 to $8 is completely reasonable this bull cycle. Easily reasonable this bull cycle. It just depends on institutional adoption. It's basically like a game theory we're playing. If we can get this Bitcoin reserve and this digital asset stockpile, it's off to the races. I'm watching that very, very closely. But XRP has performed very well. And the best way I like to have the analogy for XRP, we all know about the lawsuit. And the lawsuit's still not over officially yet. The SEC has to drop their appeal. And once that happens, then the lawsuit versus Ripple will be over with. And it's documented that once the lawsuit is over with, it basically gives institutions a seal of approval to use XRP. And if you're an EYOU, you've seen that document before. But with that being said, the best way I like to put it is, imagine a basketball being held underwater for 5 years, and then it's finally let go. It's going to explode. That's the reason why we saw XRP run up from 50 cents to $3 something, because they know that this lawsuit is finally, institutions know that this lawsuit is coming to an end. There's just logistical things and some votes that the SEC has to have to be able to legally drop the lawsuit. But they're positioning themselves because they know that this is a currency that has been held back compared to other tokens. And something that is very important for people to know is, you don't want to invest in a token that's just coming out now. You want a token that has staying power. Because if you look at the previous cycles, tokens like Bitcoin, Ethereum, Solana, XRP, those have always been the top 10, top 20 tokens. The placement on them, that may have shifted, but those tokens have proven staying power. In order for institutions to adopt the token, they need trust, like how Troy and Rashad were saying earlier. They need reliability. The financial system doesn't follow hype. It follows rules, reliability, relationships, and trust.
Mr. Document and do the research. You always give us dates, right? Based on all the research from institutional documents, what are some dates that we should be looking at in the next couple of months that we should be circling on our calendar so that we can prepare ourselves?
The main date that I have, or the two that I have, is one, July 22nd. I'm not sure when this podcast will officially come out, but July 22nd, that's when the working group has to present all the findings to President Trump. Well, then who knows if they'll release that report, but that'll speak about the Bitcoin reserve, the digital asset stockpile, certain regulations that need to happen, certain policies and rules behind the scenes, because this stuff goes deeper than the Genius Act and the Market Clarity Act, because there were certain policies that organizations throughout the government had that restricted banks and institutions from entering the space. And they've all been peeled back one by one. And for a researcher like myself and some others in the researcher community, you know that these policies are peeling back are almost more important than the regulations themselves. So I'm very, very excited for this July 22nd deadline, regardless of when we get the official announcement of what it entails. But then August, President Trump said, no matter how you feel about him, he stated that he wants regulations done by August. Let's see if it happens, because if that happens, that times up perfectly with the 4-year cycle in the bull run for the last leg of the bull run, where true wealth is actually created.
August makes it very interesting when you think in terms of when the next tariffs will be allegedly will be implemented. When people take money out the markets, we see crypto usually have an influx. So definitely, okay, got you. I'm looking into that.
You know what else is in August? Best Fest. Get your tickets.
That's a fact.
That's a big fact.
That's a fact. Before we leave security, like is there any latest updates on security?
So there actually is, and I've been looking more deeper into it, hopefully to have a official update for everybody. But there was a combined document with the FDIC, the OCC, and someone else within the government, and they stated that banks can now custody crypto assets. There was no rules or regulations around it. It was just a letter they released jointly. But that goes to show me that they're actively working on custody options behind the scenes. So if that comes, it's something I'm keeping my ear to the ground for. But for crypto custody in general, you want to be able to know that your assets are safe. Like, make sure you buy a cold wallet, a ledger, Decent, whatever it may be, whatever your personal preference is, go ahead and buy it. But make sure you buy it. I personally use Ledger. Buy it from the actual website. Don't buy it from Amazon. Don't buy it from someone else, because it comes with keys that you have to be able to hold. But an issue that came up with one of my friends is that their house got robbed. And you know what they did? They left the ledger and their keys together in the safe.
Ooh.
So both are gone. So even if you lose your ledger and you lose your keys, you lose everything. Make sure you keep your ledger and your keys in 2 separate locations, because then you know that you're safe. There's little things like that and intrinsicies that can get people caught up. But you want to make sure your crypto is safe. Some people are going to have, and I think it was your guys' podcast. I forget what episode I was listening to. I think it might have been you, Rashad, where you said that where would you rather keep $10,000? Would you rather keep it in the bank, or would you rather keep it at home? And I thought that was a perfect analogy, and I think that goes to crypto seamlessly. If you would rather keep your $10,000 under your mattress, have a ledger, have a cold wallet. If you would rather keep it in the bank or with the institution, hold it on the exchange, hold it with these banks and institutions once they allow crypto custody to be a thing.
Let's talk about InvestFest. I know you're going to be there. What are you looking forward to, and what you got some ideas what you're going to speak about?
Yeah, I got some ideas. I got some stuff cooking. But with that being said, these were just 13 documents out of my 12,000 that I have. There's a lot more that I have, and that I'm really getting to the weeds. I'm super excited to be able to go to InvestFest and just state what actually is going on, because I have nothing to gain from giving you guys these documents. Like, I teach the class for Earn Your Leisure University. I give back to the community because this is the community that helped me get started. But I'm not like these other influencers that are just pushing an agenda, pushing my platform. I just want the community to actually get honest, reliable information. And you don't have to believe me. And that's why I presented this class today how I did. I just read you exactly what State Street said. I read you exactly what the World Economic Forum and Citibank said. Those aren't my thoughts or opinions. They're their thoughts and opinions. And I'm excited to be able to share some real up-to-date information at InvestFest. And I'll be probably changing my answers and how I present everything leading up to the event, especially with the July and August deadline. So if you come to InvestFest, get your tickets, but make sure you attend my session, because I will be giving the most up-to-date advice with crypto.
That is 100%. I know you're going to be giving a lot of information. I wonder, as you look at that lineup, man, who are you excited to see?
I'm excited to listen to Jack Dorsey, Magic, of course, because he was one of the first people with the Bitcoin strategy. So I would love to hear his take on the space, because everyone wants to say, like, I don't agree with what this person is saying. He has more money than you. Like, it doesn't matter. like it really doesn't matter. He's been in the space longer than you. He has different relationships and different connections. Because if you notice what I said earlier, banks rely on rules and relationships as well as reliability. And the relationships aspect is key. And he is in the room with different relationships than we are. And he's privy to different conversations that we are in. So I'm super excited for that. Of course, excited to hear you guys speak, as well as Ian. Ian always kills it for his presentation. So it's going to be a great weekend in general.
Yeah, man. If you could ask him one thing, what would it be?
Who's Satoshi?
right.
Like, that's why I have so many questions, but that's the one question. I've seen hints and guidances. Let me stop. But
some people think it's him. You never know. Some people think that it's him. You never know.
You never know. Come to
invest,
find out.
We might be exactly. We might have the unveiling for the first time ever in world history. Not out of the realm of possibility. Tell the people everything that you got going on, as far as, like, I know you have a site and your social media and stuff like that, as far as how they can tap in with you.
So you guys can reach out to me. My Instagram handle is Austin Haynes __. Give me a follow. But other than that, how people can mainly tap in with me, what I do is I teach the crypto portion for the investors group for Earn Your Leisure University. If you want to watch me teach twice a month on crypto and give you the most up-to-date PowerPoints, make sure you join EYOU first. And then my own personal site is sswealth@kajabi.com. If you go to sswealth@kajabi.com, the link is in my bio on Instagram. You will be able to find where I share those PowerPoints and those physical documents, as well as I have an investing how-to guide that breaks everything down on how to really go about investing in crypto. Because I know it can be scary. I know it can be different. But those are the two sites where you can really get the most bang for your buck. And I think that both of them provide value. If you want the physical documents, go to my site, obviously. But if you want to watch me actually teach the course, join Earn Your Leisure.
That's a fact, man. We are honored and privileged to have you. It's been incredible. I know we did a class together that was, I mean, we had over 1,000 people in there, man. Shout out to you. Shout out to Dahuda and Steph. Incredible, incredible. Make sure y'all tap in with us. Yeah, man. Thank you.
I appreciate you, brother.
Thank you guys for giving me this opportunity. And something that I definitely want to make sure I touch on is that I wasn't always this in-depth with my research. I wasn't always diligent and focused on what really matters. And how I got started with actually being very, very diligent is watching Market Mondays. I've actually gone through Market Mondays twice and taken notes on all of it. From episode 1 to whatever episode you guys are at now, I've watched all of them and gone through twice. And you gain the most amount of information and knowledge the second time when you go through it, because you don't even know what you're listening to, and you don't even know the keywords and stuff to pay attention for. And like Ian says, like how he states an indicator should be able to be used on every asset class is the same logic on how you go about research and how you go about the fundamentals. And I just applied that logic and that knowledge to crypto, and that helped me 10x my researching ability and 10x from where I was at. So if people want to know how they can get better and how they can do stuff, I highly suggest that, as well as a gem that I want to give out, how I get my documents. It's 10 times simpler than what people realize. I quite literally just type on Google, institutional adoption or institutional crypto adoption, PDF 2025. You can change what you put in the front of it. You can put ISO 20 or 22 adoption. You can put JP Morgan crypto adoption, PDF 2025. Put PDF if you want the PDF version, or put PPT for PowerPoint if you want the PowerPoint version, and just put the year of a document that you're looking for. And that'll give you everything you need to know. That goes for crypto, that goes for AI, for quantum, for biotech. It's a very, very simple strategy, but I don't think people realize that.
No, that's powerful, man. Thank you, man. This is a wonderful presentation. And definitely make sure you network with Austin at InvestFest. Go to his panel. But then, just catch him too. Like, I'm sure that, it'll be in the vendor marketplace and this throughout the course of the weekend. So we bring in some of the brightest minds in the crypto community and just in all different realms of finance to Atlanta for that weekend. So powerful situation where you can have, so many great people in one room over the course of 3 days. So don't take that for granted at all. So Austin, thank you for all you do at EWAL University. Thank you for coming to InvestFest, and I really appreciate it, man. Thank you.
Thank you guys for having me. It's an honor.
Appreciate you, my guy.
All right.
Man, that was a lot.
There you have it.
That's a notepad full, man. I feel confident. I feel confident in the space, man. I go into the community, and anytime Austin posts, man, I'm reading it. I'm taking information. I love the way he does research. I'm a research guy, so shout out to him and kudos to him, and shout out to everybody that tuned in. Yeah, hopefully y'all got a lot from it. I know I did.
Yeah, no, I think it was very insightful, and like he said, it's like look at what institutions are saying, look at what the experts are saying, look at what the billionaires are saying. Like all roads lead to the same thing. So it's not a thing of like, well, just listen to me and just blindly trust me. Like it's actually backed by not only research but just documentation of what people have already done, already said, already invested in. So I mean,
follow the money.
Can't get more simpler than that. Yeah, for sure. All right.
I'm excited. Yeah. InvestFest is going to be something special.
Yeah, get your tickets. Get your tickets to InvestFest, man.
That's a fact.
Don't play yourself. Everything from crypto. And then for the VIP ticket holders, we're going to have the webinars after InvestFest too. We're going to talk about crypto, real estate, stocks, AI, live Q&A. So, man, don't miss the boat on that, man. It's going to be a good weekend. Looking forward to it for sure. All right. Anything else we need to talk about?
I think we good, man. I think we good.
All right, ladies and gentlemen. Thank you, guys. We'll see you on Monday.
Love is love. Be good.